Well, here we are, folks. Happy February. It's a new month and a new year, and in New York State, that means we have a new rule for all of my fellow business owners out there. If you haven't gotten your early Valentine's card yet from the state, there's this new thing called New York State Secure Choice Mandate. Choice Mandate. Don't get me started. So, first and foremost, the basics are if you are a small business, okay, this is about a retirement savings for your employees. Okay, if you're a small business owner of 10 plus employees, those are W-2 employees, salaried, hourly, etc., qualified employees, not contractors. And if you've been in business for 2 years, although the fine print doesn't say if they're going by fiscal, tax, whatever, but just assume it's 2 tax years for now, and hopefully the state will be more clear with their language later. But if you fall into this category and you do not already have a retirement plan offered for your employees, even if it's not one that you fund or partially contribute towards, if you don't have one, then you're going to fall into this category. However, there are some exemptions, and I think it's important that if this is news to you and you're not sure what to do about this yet, I think step one is to see if you qualify for an exemption, just to know if that's an option. And then if you really do choose to do something, we can talk about that. So if I did it correctly, there's a link right down here, and this should take you to New York Secure Choice. It starts with a gov and then it converts to a com for some reason, but it should open up to a New York State link that asks you to verify your tax ID number for the business. And then if you don't already have a user account with this portal, it will ask you to create one. And you essentially will go through the list and see if you qualify for an exemption. If you don't, or if you really do want to get this done and this is something new, or it's been on your mind and you want to talk to someone about it, obviously we welcome a call anytime. Okay? Basically, the good news is if you want to do it anyways, you're already doing it. There's tax credits that go along with it. So the tax credits, forgive me if this isn't clear on camera here, but it says up to $5,000 of a credit, okay, not deduction, actual credit, and that's to cover your setup fees and costs. So it's up to that. If your fees and costs qualify, they'll give you credit towards that for the first 3 years. And then in addition to that credit, there is an additional $1,000 per employee per year for or towards if you are contributing, even if it's a partial contribution to the employee's retirement plan. So that's the good and bad news there. The bad news is this is a new thing that if you weren't prepared to deal with and it wasn't on your bingo card, it's now on your calendar. You have to comply or be exempt or whatever. You have to figure that out. Hopefully by now this is not news to you. Hopefully I'm not the first one to mention this to you. You should have gotten a correspondence either through the portal or by mail. And we are kind of in the middle or the beginning portion of tax season. So maybe your accountant already has brought this up to you, or your financial advisor, or if you have a plan or an admin team or HR or someone like that. Now, what I personally do, okay, for many of my fellow business owners is I do have a certification known as CPFA, okay, Certified Planning Fiduciary Advisor. I am happy to help people if they're looking to do that. If you do want to engage in someone who will be a fiduciary, help you map out the plan, we can handle all that for you in-house. We also have a lot of vendors and partners that we very often can find a more efficient way to do some other things. If you need help with payroll and such, we can kind of look at it all together. This space, that type of sector, that type of business, the retirement plan business, it's very competitive for pricing because they know it's high in demand. And now with the state making this ruling, there's even greater demand now because some people kind of feel they're being forced into this, hence the word mandate. So, choice, mandate, I get it, but it is the name of it. And ultimately, the state's intention there is to make sure that small employees for small businesses have some opportunity there to save for retirement in the conventional sense that a lot of larger companies offer. So they're saying this is helping you make it, so that you're more competitive with your hiring talents and such. I would argue that what it's doing now is just creating more demand, and you may find it difficult to find qualified, experienced person, team, or company to help you set this up. So that's kind of my offer there. If you want to talk to someone who is a certified specialist, who is a fiduciary, who can help set up the plan, I think you'll find ultimately that the pricing kind of gets lower because a lot of us have figured out all the things that connect. So we can connect a few different things that you have to do anyways. Try to do it all in a bundle, if you will, and keep the cost as modest as possible. So happy to help. Hope this was informative to you. Please share it with your network. Like, subscribe, all that fun stuff, and we'll keep you posted on anything else that comes down the new year narrative there from the state. So good luck out there. Keep it going, and hope to talk to you soon.